Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, July 30th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. We will come back to this chart in just a couple of minutes. I want to start with a weekly chart of the S&P 500. So each candlestick on this chart does represent 1 week of trading, and this chart is focused on calendar year 2021. The green line is the 10-week moving average. The blue line is the 40-week moving average. For the week, the S&P 500 was down 37 basis points. So this candle right here, so down just a fraction, down 37 basis points, and we closed at 4395.26 on the S&P 500. Now, one of the things I want you to take away from this chart is the fact that there's only been three weekly closes during calendar year 2021 that have happened below the 10-week moving average. So there's only been 3 weekly closes below the 10-week moving average so far for calendar year 2021. I mean, this market has been so resilient. You know, we've had several weeks here, the very first week of the year where we pulled back to the 10-week moving average, and we've had numerous weeks, as you can see, where during the middle of the week where we penetrated including just a week ago, right, where we, fell below the 10-week moving average during the middle of the week. But as far as weekly closes, there's only been 3 weeks during the entire 7 months so far of calendar year 2021 where we've had a weekly close below the 10-week moving average. So it just shows how resilient and how strong this market has been. The other thing I want to point out here is for the week, the volume this week was actually lower than last week's volume when the market was up. And the importance of that is that, when you get a slight pullback in the market on low volume, whether it's average volume, right, for the year or volume that is actually lower than the previous week when the market was up, that just tells you that the selling really isn't anything too serious at this point. The next chart that we're going to look at is a daily candlestick chart of the S&P 500 that focuses just on the month of July 2021. So again, each candle does represent 1 day of trading. And for the month, the low of the month was set on July 19th right here at 42.3313. And then over the last couple weeks, we had this very nice rally that actually pushed the S&P 500 to a new all-time daily closing high on Monday the 26th. So right here, what that means is Monday the 26th, all-time daily closing high. I just abbreviated that ATDCH. So right here, this past week, we hit a new all-time daily closing high on Monday the 26th at 44.2273. Sold off for a couple of days, and then Thursday, we hit a new all-time intraday high, ATIDH, all-time intraday high, 44.2997 right there on Thursday, and then pulled back slightly on Friday. We were down 54 basis points on Friday alone right there. But, for the week, as we know, we were only down 37 basis points on the S&P 500. But again, the past week, brand new intraday high, brand new intraday high right here, and then brand new daily closing high, all-time daily closing high for the S&P 500. So even though we were down slightly for the week, we still set a couple of records this past week on the S&P 500. The next chart that we're going to take a look at is a weekly candlestick chart of the FXI. The FXI is an ETF that tracks China large caps, and this particular chart, again, it's a weekly candlestick chart, so every candle is a week's trading on the FXI, and this chart goes back to 2019. Now, what we can see here is where the FXI bottomed in March of 2020, along with a lot of other things, right? Because of the COVID sell-off, we had this nice bottom and then this uptrend line that was very nice and stayed intact until March of this year. So we had a nice one-year run in the FXI, but we can see what has happened over the last few months. And this candle right here was this last week's trading in the FXI. And this week alone was ugly, down 5.24% on the FXI on extremely high volume. I mean, look at this volume bar. And then if we go to the left, you can see that the last time we saw this type of volume was back in March of 2020 during the COVID sell-off. So this was a very, very serious sell-off. And that's, again, why I was pointing out, you need to pay attention to volume, right? Not just what happened in the market, but what is the volume telling you. So this was an extremely high volume down week on the FXI, which is not good from a technical perspective. And then in this rectangle, this box that I drew this so we could just take a quick visual look to the left and see where the FXI was trading at the beginning of 2019. And you can see at this point, this last week's trading, we haven't, this is the same place we were trading at in the beginning of 2019. So we haven't made any progress in the FXI for years. And guys, it's even uglier than this, okay? But, and by the way, if you are a Simple Market Signals subscriber, I did put a monthly chart of the FXI in this last newsletter that just went out on Saturday, so Saturday the 31st. So please, if you are a Simple Market Signals subscriber, pay attention to that monthly chart of the FXI. It's very enlightening. And guys, if you do run any of your own money, or if you're a financial advisor, but if you run any of your own money, including your 401k, your 403b, your TSP, right, if you're a government employee, your thrift savings plan, if you have any exposure to U.S. large caps, the S&P 500 or something equivalent, guys, or if you want to know more about international investing, right, because this is the type of work that I do and I include it in my newsletters, but please, guys, do yourself a favor and pay close attention to the tail end of this video where I'm going to show you how to get more information about Simple Market Signals. You owe it to yourself to at least understand what I do, why it's so important if you run money either for other people, or if you're a financial professional, a financial advisor, a money manager. I've got hedge fund managers as clients. I've got guys that run RIAs, a lot of financial advisors, other financial professionals like mutual fund wholesalers, and a lot of executives at companies with 401ks, either hundreds of thousands of dollars in their 401k, or in some cases millions of dollars. And they're using Simple Market Signals and my system to help manage their money, guys. So please do yourself a favor, spend a couple of minutes looking at what I do. I'm inviting you to work with me here, and it helps, guys. So for a lot of you, it's going to cost you money not to be a subscriber to Simple Market Signals, and I mean that quite sincerely. Real quick, just a couple of weeks ago, I had one of my subscribers call and tell me that he's made tens of thousands of dollars this year because of Simple Market Signals, tens of thousands of dollars in his 401k that he otherwise wouldn't have made, okay? So that, when you think about the cost, and I'm not going to spoil it for you, it's very low, but when you think about the cost of Simple Market Signals versus making tens of thousands of dollars, that is an unbelievable ROI, return on that investment, okay? Plus all that you're going to learn by being a subscriber to Simple Market Signals. So, guys, with that said, please, spend the next couple minutes doing some research, watching more information that I have here about Simple Market Signals, and make up your own mind. But, if you're ready to take your investing and you're trading to the next level, even if all you do is run your own 401k, this can make a huge difference for you. So again, thank you. Please pay attention to the balance of this video, and I will see you in the next video. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.